Good morning, welcome to this weekly market outlook from AGM Markets. Today is the 28th of May 2012. For any new followers, basically what we're doing is trying to give some sort of weekly outlook into the markets, mostly looking at Forex, but we'll have a look at gold as well. Tend to look at weekly charts, daily charts and 4-hour charts, trying to give some sort of perspective into what I think will happen in the week, what could happen in the week, and just basically the main sort of technical analysis to look out for. Won't be making any trade calls or recommendations. You trade at your own risk. Please look at our disclaimer on the website agmmarkets.com. Also, for any new followers, we do have 3 moving averages in each of these charts. The red is the 55 simple moving average, the purple is the 100 simple moving average, and the gold is 200 simple moving average. Okay, then let's have a look at euro dollar. This is the weekly chart here. What we've been speaking about for the last sort of few weeks really was this recent fib move from the 1.18 low to the 1.4939 high, and that's now starting to break down really. I mean, we initially had the nice reaction off the 50% here a while back, and we were looking for some sort of bounce of the 61.8, but it hasn't really been too technical. I mean, and the most important thing to look at now is that we've now had a weekly candles to close below the 78.6 Fibonacci retracement level. So euro dollar is looking very heavy now. It looks like it wants to come down, test those lows at that 1.18 level. I was having a little look at the monthly chart, and you can see, well, in fact, you can see it on the weekly. If you let's say we just draw some sort of channel from the top up here down there. Let's just put it to the weekly. That should be a bit clearer. Let's delete that a second. Just to kind of keep everything into perspective, it's good to look, even if you don't trade the long-term charts, it's good to kind of keep in some sort of perspective. In fact, I'm using equidistant channel just so you have some sort of idea of where the pair could look down to come down and test the levels I'm sort of looking at. Well, what I'm trying to keep perspective on is this kind of downtrend channel that we're having on this chart, and it looks like now that we've now kind of broken mid-channel, we look like it wants to come down and test these lows. So especially all the fundamental stuff on at the minute, it really does look like we're going to come down and test, let's say, this 119 level. Don't know when it will happen, but most likely it will happen over the sort of next sort of few months, especially over the summer. I would not be surprised if we saw 119 get taken out. So that's the sort of bigger term perspective. I mean, you have to remember that we are miles away from these moving averages as well. But there's nothing stopping euro dollar. I mean, it's pretty much in free fall mode now. You can see it's broken these recent supports. There's the first one there. Broke that support there, which also kind of coincided with this support around here. So that's, yeah, so the one to the right was the first one that we got broken, and then we got broken that one on the left. So we are now, as you can see, so if you draw the kind of support line there, we're now below this. We've got, the level we're kind of testing at now is this kind of 125 level. That's the I should draw this up for you. You can see the level that we are now at is this 1.25 area, and we've already had some sort of bounce off of this. If you look at the shorter term chart, let's say that if you look at the 1-hour chart, on Friday we came down, tested this 125 level, and we've had a little bounce up. So 125 is now the support everyone's looking at. And in fact, if you look to the left of your chart, it was a good sort of support level around here in 2008 when we got the big sell-off, subprime sell-off that everyone knows about. It was very good support in 2008 and in 2009. So, and now we are in 2010. It will be very interesting to see what is going to happen at this level, but we're not exactly seeing any sort of sign of reversal yet. I mean, previously when we had the bounce off it over to the back to the left again, you could see we had a lot of weekly candlestick wicks that pierced below the 125 level, and we had the weekly candlestick bodies close above that level. But I mean, yes, we've had the candlestick close above it, but literally by the skin of its teeth. There's no sort of sign of reversal yet. So if we are going to get a bounce, and it's all about this week, in my opinion. If anything, a good sign of reversal is if we came down a bit this week, tested that level, and then got some sort of reversal, some sort of hammer maybe. Then I would perhaps change the outlook and think that we are still in some sort of bullish pattern, but we're definitely not in some sort of bullish pattern. In terms of longer term perspective, it does look that we're still in this downtrend channel. And it looks like that 125 will get taken out this week, and will continue downwards into this downwards channel on the weekly chart. In terms of this week, what really we look at, I mean, if we flick it to the 1 hour, in fact, let's look at the 15 minute. You can see we've got this big gap fill here. We had a big gap up last night, Sunday night, when the markets opened. So this still has to get filled. But you also have to remember that we've still got a few gaps still open up here. Well, I'll just make that a little bit wider. We still have 2 gaps that are still open. The first one was this little gap here, which most people probably forgotten about. But the most significant gap, which still hasn't fully filled, was this one up here. You have to remember, gaps, especially on euro dollar, do normally tend to fill. So would not be surprised if you did get a bounce, then we come up at that level. But nothing is looking too healthy at the moment for euro dollar, especially all the fundamentals out as well at the minute. Nothing seems to be happening in terms of Greece. Not a lot of conviction out there in the markets in terms of the fundamentals for Greece. So in terms of the technicals this week, all I've really been looking for, I mean, it looks like 125 wants to get taken out, but you have to remember that we still have got this current gap to fill and those 2 other big gaps. So people are still going to be looking towards the long side. But in terms of this week, I would definitely, I mean, I would personally be bearish, purely because we've got this recent gap fill, and you have to keep that in mind. I mean, they tend to get filled quite quickly on euro dollar. So I would not be surprised if it got filled this week, but it doesn't have to get filled this week. It doesn't have to get filled today. It doesn't have to get filled tomorrow. It doesn't have to get filled this week. It doesn't even have to get filled this month, but it do tend to fill. And this one will most probably be the first one to fill. So that is always good to keep in mind. But no, I mean, it has been a very technical chart. I mean, a recent fib you could look at in terms of any more sellers coming in if we do get further bounce would be the 50% retracement. I think this recent bounce has been 38.2. Actually, I'll put that on the chart. It's not that I like to use it too much. 38.2 fib retracement has been where we've bounced off it. Yeah, you can see that there. That's where sellers have already come in. They're not even waiting for the 50% to sell. They're already selling at 38.2. So it looks like, I mean, currently this week, well, currently today, it could follow on tomorrow, that we could get a further sell-off, and this gap fill could get covered. So that's the one thing that I'd definitely be keeping in mind, especially today and over the next couple of days if it doesn't get filled, is that gap fill, and then see what happens around the 125 level. Okay, let's have a look at cable. What we've been talking about in cable, I mean, everyone knows about the kind of weekly patterns on cable. I won't dwell on them too much. But what we spoke about last week was this fib setup. I'll get rid of 38.2 now. What we were speaking about was this fib setup on the daily chart. So we have the 152 low to the 163 high. What it looked like was going to happen is that we were going to get some sort of bounce off of the 50% level. That didn't happen. I mean, we did get quite a nice candle reversal. A lot of people would have been playing this with stops just below lows and trying to take out this 0% high. But you can see with this congestion of moving averages, especially the 100-day and the 200-day moving average, the 100-day capped the pair very nicely, continue to sell off. But now that you can see, we've had a nice bounce off the 61.8. So it's all about what's going to happen at this level. We've already had some sort of bounce off it, but in terms of if we get any more momentum to the upside, we need to get above that 50% level and get some sort of solid close above that 100-day moving average. But you can see there's a lot of resistance above this pair. So if we are going to get any sort of bounce, then it needs to get above those technical indicators. The key thing about the 61.8 level is that it was also good support over to this left area here. We had a very nice bounce there actually to the pip. So that's been a very good level of support, this 156.40 level. And you can already see we've already had some buyers coming in at this level, but it's still looking heavy cable. I mean, we've had a big retracement in such a short space of time, pretty much within the last the last 4 weeks, 4 weekly candles. We've had a very big retracement in cable. Virtually, I mean, from 163 down to 156.40. So we're talking nearly 700 pip retracement here in a matter of 4 weeks. So cable being very aggressive indeed. Another sort of another thing you can keep on your charts is this trendline support that we've got around here, in case we do get any further sell-off. So people will definitely be having that on their charts, and that's one to keep an eye out for. But in terms of a slightly shorter term perspective, it's all at 61.8 for me. And okay, do we have a gap to be filled? Yes, we do, a little gap there. So that's why we're not having some sort of big bounce already today, because we still have this gap to be filled here. So that's definitely similar to Euro, really. Always got to keep the you always have to keep in mind these gaps, because they do tend to get filled very quickly. So yeah, quite an interesting week on cable. What I'd really be keeping an eye on is this 61.8 level. If we're going to get any sort of bounce to the upside, then we need to get some sort of close above this 50% level, but it will not be easy for cable, as it does look very heavy indeed. There's some big aggressive long-term sellers out there in cable, so be careful when trading this pair. Okay, let's have a look at dollar yen. What do we have on dollar yen? Nothing too much of interest on dollar yen, as we've spoken about for the last sort of few weeks, really. This recent fib move is what we're looking at. We've had a kind of bounce off of this 61.8 Fibonacci retracement level. I mean, it wasn't to the pip exactly, but we did have some sort of bounce, and then you could see that we also had a bounce off of the 50% on the way up. So bounce off the 61.8, and then it came and this 50% acted as resistance. So the fib has been playing out quite nicely, but now you can see it's just in some sort of range in between these two key fib levels. And also a lot of people talk about this kind of trendline support up here, which has been holding out quite well. That also coincided with that fib there, so that'd have been a good sort of selling opportunity there if anything got on that. Well done. But that's what I'm really kind of focusing on this week. That's all I really care about, to be honest with you, in terms of dollar yen, is this trendline resistance. Unless we get a break of this trendline to the upside, then I'd only really be thinking of going long. If we do get a break to the upside, then what I'd definitely be looking out for is this 55-day moving average at 81.35. Okay, let's have a look at the Aussie dollar. What do we have in terms of the Aussie? It's still looking very heavy. If you look at this weekly, 2, 3, the last sort of 4 weeks, very heavy selling going on in terms of the Aussie. The key support I'll be looking out for is this support round here. We've had a very sort of good reaction at this support. Just highlight a few sort of areas where it was very good. We had buyers coming in there, buyers coming in there, big buyers coming in there. Weekly hammer was a great sort of resistance, great sort of support level. Good reversal candle, that's what I mean. Came in there, we had a sort of big up move there. So if we do get any further sell off, then this 96.44 level will be a key level to look out for and to keep an eye out, see what happens at this level, because we've had a lot of previous buyers, as shown there, come in at that technical level. In terms of the daily, nothing much of interest. Oh, actually no, there is something of interest. Let's get this level for you. What is interesting for this big fib that we spoke about last week, the 78.6 has been holding very, very well. We had a nice bounce off of this level, pretty much to the pip. You can also see it was previous support as well over to the left there. Yes, it pierced it, but it did bounce off this level. So this 97 handle, key support for Aussie dollar. Are we going to get the bounce that everyone's looking for? Especially after such a big sell-off move. Would not be surprised to see some sort of volatile move to the upside. We're already kind of getting that already. If you look at the 1 hour chart, it's popping up quite nicely. But also similar to Euro and cable, we also have a gap up which is still well and truly open. So one to definitely keep in mind. Gaps do tend to fill. They don't have to fill straight away. They don't have to fill tomorrow. They don't have to fill this month. But they do tend to fill, so keep that in mind. If we get any sort of retracement, then bear in mind that gap still has to be filled. I wouldn't be surprised if the gap filled and just kept them shooting straight up. But no, quite an interesting chart on Aussie dollar. All really focused on really is that kind of big weekly support level. If we get any sell-off, see what happens around that level, and also that daily fib is very interesting as well. Okay, let's have a look at dollar Swiss. What do we have on dollar Swiss? In terms of the daily, it's all that trendline support for me. It's still holding quite well. We had a big up move from this trendline support level, but now the trendline I'm really focusing on is this trendline support up here. And you can now see that we're starting to come down a little bit. So in terms of if we do get any further sell-off, then definitely have a look around at this trendline support around here. In terms of the hourly chart, it's quite interesting to be fair, because we're hovering in kind of in between this 55-hour moving average and 100-hour moving average. So it's looking for some sort of direction. You just basically got to see where it breaks out. If it breaks above the 55, then we'll be looking for that gap fill as well as another gap there. So dollar Swiss is looking to come up towards the upside and fill that gap. Hopefully you can see that there. But if you get any retracement on dollar Swiss, then it's all about this trendline support for me, which will most probably coincide with this 200-hour moving average. So quite an interesting chart on there. In terms of the fibs, where does the 50% fib retracement come in at? The 50% fib comes in at 0.9488. Okay, so look at gold. What do we have on the gold chart? We spoke about this kind of huge fib on there, so we're looking for, let's go back. On the daily chart you can see these three big supports. The first one is there, the second one was there, and you should be able to see the third to your right. So we're wondering where we got that support from, and it was a big 23. I'll draw it for you, save some time. It was this big 23 on the monthly chart. If you go from the 1998 lows to the highs, and if you stick on a 23.6 level, if you stick on the 23.6 level, you can see on that daily where we have got that support from, and that's at 1526.97. So very, very nice support, worked out very well last week. A lot of buyers came in at that level. You can see we had that kind of, not quite a hammer, but a nice sort of bullish candle there. But we haven't had a huge pop up. It's popped up and it's found resistance at just below the 1600 level, really. So we have had, and we did get a nice pop up, and then we found resistance there, but it's now looking to bounce back up as well. So if we're going to get any momentum towards the upside, then we need to break those previous highs around there on gold. And then the first resistance I'll be looking at is this 55-day moving average at 1637, followed by the 100-day moving average at 1667. And then the 200-day moving average at 1694. But yeah, for gold, for me, it's all about that big weekly support level, which comes at that huge 23.6 Fibonacci retracement level at 1526.97. But the weekly's looking very, very bullish now. Now that we've had some sort of consolidation, we're starting to get some some hammers and some weekly reversal patterns coming in, and will not be surprised if we had a bullish week on gold this week. Okay, that's all for the charts. Let's have a look at the Forex calendar. Today, very quiet day. We have bank holidays in Switzerland, we have in Switzerland, France, Germany, and the US. Very quiet day in terms of data. What do we have out tomorrow? We have the US consumer confidence data forecast at 69.6, previously 69.2. On Wednesday, we have a big Italian 10-year bond auction, so keep an eye out on that. We have US pending home sales, month-on-month forecast at 0.0%, previously was 4.1%, so we're expecting a big decrease in the pending home sales data. We have some Australian data there, building approvals, private capital expenditure, and some New Zealand data there. On Thursday, we have ADP non-farm employment change, forecast at 139,000, previously was 119,000. We also have US GDP data, quarter on quarter, forecast at 1.9%, looking for a decrease there. Previous was 2.2%. We also have the weekly jobless claims, and Eurozone. Give me 2 seconds. Don't know what's that about. All day we have the Irish Stability Treaty votes, so keep an eye out on that. That will have a big effect on the euro. Keep an eye out on that one. And also some Chinese data late out in the evening, manufacturing PMI. But Friday is going to be definitely the key day. We have Swiss data, we have retail sales, UK manufacturing PMI is forecast at 49.7, previously was 50.5. You notice all these data are all expected to fall from their previous. We also have Canadian GDP month on month. I was saying that as expected to beat actually. But the big bit of data out is the US non-farm employment change, forecasted to increase the previous horror number, which was 115,000. Expected a slight increase at 152,000, but everyone's saying that it should be that we need numbers above 200,000 to confirm that we've got growth in the States. Below 200,000 just isn't really good enough in the States. And at the same time, we have the US unemployment rate that comes out, expected to stay the same at 8.1%. And to round off the week, we have the US ISM manufacturing PMI. It's a big piece of data that forecasted a slight decrease at 54.1. Previously was 54.8. Okay, that's all for today. Hope you have a great week trading. Stay safe on Friday. Non-farms is always a very volatile day, so keep it tight. You don't have to trade non-farms if you don't want to. But if you do trade it and pick the right side, then you can make a lot of pips. So have a great week trading. I'll catch you next week. Thank you.